I think the extraction narrative of PumpFun is probably incorrect relative to the amount of value and people that they're bringing into crypto. How much of Solana's rise was Pump responsible for? I would say 80-90% of it. And so I think at some point you do have to kind of confront the fact that Pump is going to do their own token. I don't think they're going to launch their own chain, but they're going to build a lot of vertical DeFi primitives and eat a lot of the fees that are traditionally associated with Sol outside of the MEV tipping and kind of the Jito world, which will kind of stay on its own.
This episode is brought to you by Arkham. Arkham allows crypto traders and investors to look inside the wallets of the best traders, largest funds, and most influential players in the crypto markets today. We'll hear more about Arkham later in today's episode. Quick shout out to Permissionless 4 coming this summer to New York, June 24th through June 26th. We'll have speakers from all across the industry, including Hayden Adams, Kyle Samani, Guy Young, and more. Get your tickets today by following the link in today's show notes, and make sure to use code BELL10 to save 10% on your purchase. See you there. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone. Welcome back to another episode of Bell Curve. You got Michael's 1 and 2, Vance. Fellas.
This is why we pod.
For days like today.
This is why we make podcast art.
I can only imagine that this is the generational top in memes. Like, the memes that come out of this have got to be some of the best of all time.
It's so good. I've never seen so many things go wrong at the same time. It's really unbelievable.
But there's one thing that's going right, which I'm sure we'll talk about, which is Circle. We'll put that one, but
it's a low float, high FTV for the masses.
That's what I was going
to say. All right. So before we get into that, just to talk about the salacious gossip of the day here, Elon Musk just tweeted, "Time to drop the really big bomb. Real Donald Trump is in the Epstein files. That's the real reason they've not been made public. Have a nice day, DJT." Just tweeted this out. Tesla's down. I guess it was down to 16% now. It looks like it's recovering a little bit, but
buy the dip. Buy that dip. It's okay. So here's the Elon bear case. I've been telling people at weddings, dinner parties is the Elon bear case for a long time, but it's here. So right now Tesla is trading at 200x forward earnings. There's a chance that Tesla has no earnings in 2026. He's crashing out on the president. He dropped the Epstein files bomb. The EV subsidies are gone. The solar subsidies are gone. He does have the Starlink card to play. He does have the SpaceX card to play. But I think we will have looked back and seen the top of Elon pretty clearly.
Or maybe the relative top. Who knows what he does later on? But it's definitely not going to be something that is an immediate resurgence. It really will be interesting to see what happens with the power and the money and the bankroll of Elon versus the government of the United States. And it's kind of buried within the House bill, but people have started to pick up on it, at least the one that's gone through the process so far, and we'll see what happens in the Senate. But what has at least been proposed is killing the 30% investment tax credit for solar within the United States, as well as the EV credit. And those are two direct shots at Tesla. And I think that was probably the fraying of the relationship. It's all been masqueraded as this bill just blows out the deficit. We need to cut spending, blah, blah, blah. That's what Elon has been saying. But in reality, he's pissed that they're getting rid of the subsidies that basically built his business. And I think that was the straw that broke the camel's back. And now it's happening in real time on Twitter. And there's just like,
oh, good. I want to bask in forever. I mean, these are things that money can't buy, really. Just these types of days and experiences. And
well, I think so. One thing that we were just talking through is like, okay, what does this mean? And what do the last couple of weeks mean? Like the big, beautiful bill, what does that do? Why does this matter? How does this relate to crypto? I mean, I think the very obvious thing is there's stuff that like, okay, all of the companies that are built around these subsidies, those are going to take a hit. Tesla primarily, or solar companies in the United States, like they've been rocked pretty hard as soon as the House passed the first iteration. But then the question is, okay, well, what happens to the rest of the market? If the deficit is like 8 or 9% and not even getting cut, I think it's like buy every asset that you possibly can get your hands on that are denominated in dollars. The harder the asset, the better. Bitcoin, gold, and basically everything in between. We're big proponents of Tom Lee, and Vance was just reminding me that like the bear market opportunity for the stock market was if Doge was too good and cut too much, because what that would do is it would ultimately hit the revenue and contracts of all the businesses, and the businesses would have less profit, less growth.
It's austerity.
Exactly. I think the train has left the station. I think we tried to stop the train or slow the train down. In reality, we just sped it up, and it's kind of a foregone conclusion. This was like our last shot. Now Doge is very obviously not working. There were kind of murmurs about this over the last few weeks, over the last few months, and then like Elon's taking a step back and like, oh, what does this mean? But it could just be like a little quarrel or a tiff between the two big guys. And no, this is an all out battle now, and like gloves are off. It's over. The train has left the station.
Yeah, I think the other stuff is Elon wants a broader cultural movement to drape himself in, much like a lot of other venture capitalists or people that are entrepreneurs. So now that that's not going to be the US, it's probably going to be something that logically follows his experience working for the US government, which is the deficit is not getting cut. And seeing the Las Vegas Bitcoin kind of populism on display, I think a lot of these, billionaires, millionaires, whatever, like tech Illuminati that were in the White House are going to pivot towards Bitcoin, ETH, crypto, and the notion that the deficit will never be cut. There is no stopping the train. It's over, and we're back. So it's like it's great to see this. It's only took 5 months.
Okay, last bit of fun speculation here before we get into crypto, but do you think this is enough to make Elon switch parties? What if Elon went back to being a Democrat?
I literally just said this. I like, what happens if next go around he's like, all right, here's $1 billion to the Democrats? I could totally see that happening. And what does that do? Does it matter? I honestly don't think that it matters that much. And there will be, I think money can only get you so far in elections. Like, it helps with all the things that you already have going for you. It helps with defense. It helps with getting your voice out, getting the narrative out. But if you don't have a narrative right now, which is how I would describe the Democratic Party, if you don't have a leader, which is also how I would describe the Democratic Party, you can't fix that with money. And I think that's the bigger issue. But I could very easily see him switching sides, just out of spite.
Where do we think David Sachs' headspace is at the moment? This is such an interesting position for him.
A rock, a hard place. In the middle is David. I mean,
the people who have facilitated all of this definitely don't look right. And there's Lutnick, Sachs, man.
Yeah, the transhumanist with a chainsaw was not a natural fit for the Conservative Party. I don't think Elon is going to be welcomed back into the Liberal Party. He's already posted about starting a third party. And this is always where you kind of get with this, where like it's kind of like Andrew Yang territory, where he's like, yeah, we're going to start the Forward Party. We're really going to do this. And I think anybody who's like voted for a libertarian or volunteered for a libertarian campaign understands is they really have no chance of winning at all.
I think he understands that, though. Like, once again, it's the same problem. Like, money doesn't fix that problem. Like, we're in a two-party system, and you're either on one side or you're another, or you're not participating. Like, you could just, all right, I'm done with politics. I'm steering clear. That was Too hot.
That's why this Silicon Valley should have never come to Washington, but they did, and now I think there was an era briefly as it was that tech was going to be really united with politics, and now I think the risk is that it's even further apart.
Yeah, it's interesting. You never know, because I think the reason why the left really hates Elon, and if you look at a lot of these like polls about who's more unpopular, Elon's even more unpopular than Donald Trump in a lot of areas. But I think the reason why he became unpopular originally was because he switched sides, right? And it's kind of, you hate the apostate more than you hate the one who betrayed the original values. And I'm not really sure what it is. There are a lot of crazy narratives around Elon out there, but.
Sam Altman played this the best of all.
Why? What's his position?
Squeaky clean, not too much on the left, not too much on the right, focused on the product, focused on company, not showboating himself. He's long-term world's richest. That's my bet.
Well, I would actually say the reason why he played this best is because he didn't have to play the game at all. Sort of like the second that you get brought into the ring, like you're going to get punched. It's, like Zuck.
But he's in the arena. He's fighting for these Middle Eastern deals. Oh, but he's only in the arena that matters to him. He's not doing this whole let's do Doge, let's do, chainsaw stuff for the budget.
He didn't choose to involve himself further than he needed to. That's correct. But, Zuck got brought into politics from 2016 and misinformation. And I'd say the reason why OpenAI and AI in general will have its issues no matter what, especially as it gets more widely adopted by consumers and businesses. But right now, it's still small enough relative to not having the mass scale that requires Sam stepping into the political ring and actually, taking some shots. He will eventually, but maybe his terminal value is much higher right now because he hasn't yet. But I bet he will.
Fascinating time. I'm not a huge fan of the reality TV era of politics, but this has been a juicy day. I'm not gonna lie. I just want to see what happens. Arkham was created to make blockchains human readable and simplify blockchain data so that it is meaningful and useful to the average crypto user. With their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. To get started, follow the link in the show notes below. This episode is brought to you by Marinade. Marinade is a high-performance staking delegation platform that brings both liquidity and security to the Solana network by connecting SOL holders with the best staking rates on Solana. Follow the link in today's show notes to learn more. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Okay, curious to maybe switching to crypto a little bit more here. I'd love to get your guys' take on the Circle IPO. So so maybe to do a little bit of a rewind and a history of Circle, the company. Circle, every crypto startup is roller coaster, but Circle in particular. So when Circle started back in, I think, 2017, they got an investment from Goldman Sachs, which was a huge deal at the time. Crypto was a really dirty word back then. And they were kind of, Jeremy Allaire and Circle was kind of the golden child. And when you look back at that business model, they did a lot of stuff. I'm not sure if people know this about Circle, but they had this L1 payments app type thing. They had an exchange called Poloniex. They had a OTC trading operation. They did a lot. They had their hands in a lot of pies. And then when the bloom came off the rose and the ICO bubble imploded, Circle really struggled. They basically had to do a fire sale of Poloniex. They shut down the trading, the OTC trading group, which, by the way, CMS is an alumni of. And it almost looked like you were ready to write down the Circle investment to zero. And then they came up with USDC, and Balaji had a tweet thread a little while back about his role in brokering this agreement in between Jeremy and Brian, and they created the Center Consortium and they issued USDC. This was really pre-stablecoins being a massive deal. People had sort of theorized about them, but I think when USDC launched, it had a very, very tiny market cap for a long time, somewhere in like 200 to 500 million, the total combined. This was around the time that Tether was trading on Omni, which was kind of like on Bitcoin, essentially. So really, really nascent market at that time. And then Libra came out. So Facebook announced their intentions to launch their own stablecoin, which is Libra. And that was a massive catalyst for the entire space. That ended up getting choked off from a regulatory perspective. But over the course of the next couple of years, stablecoins went from 500 million in volume or market cap to 300 billion today, and Treasury just called for 2 trillion by 2028. So it's been, an unbelievable sector. And yeah, in that time, and even a couple of months ago, Circle was, the rumors of it struggling a lot, right? It's, pretty famously tried to IPO. I think this is their third time. It looked like they weren't going to get across the finish line. There were rumors we've talked about on this pod that Ripple was going to acquire them, maybe Coinbase. And then rumors last week was that actually the IPO was oversubscribed. So I think they originally started at $21 a share, and then they boosted it to $26 or $27. And then today, when they started trading, I think now they're trading at about $75, but it traded over 100. So I can't help myself. First of all, I love the idea of more public companies in crypto. We've really only had Coinbase historically, although I think Galaxy now made the switch to NASDAQ. So now we've got 3, which is great. And underdog story. So props. I'm happy for Circle. Great result. But I'm curious, what do you guys think about the IPO? Does it say anything about demand for crypto companies? Does it open up the IPO window or M&A? Or just curious what your guys' take is in general on the whole thing.
I think my big question here is how, and we won't be able to know this for a while, but like, how do we disaggregate what is demand in general for new issue versus demand in specifically for crypto or stablecoins? And I think, if you look at CoreWeave, it's up 300% since its IPO, low float, now high FDV type opportunities. eToro has outperformed as well, does have some crypto in it. There is kind of like this, let's get our hands on new issue, especially in hot sectors. And so like, that's one question as to like how much of this activity is driven by that. The bankers obviously messed up the pricing. 100+% pop on day one that basically benefits all the people who bought into the IPO who are now able to flip it, not the company itself who sold the shares for 100% or 50% less than they would have otherwise. But it was, continually overstretching the range that they kept on setting. So it's a hard process. I mean, this is a new asset class. And so next, the question is, how does this react to news in the crypto markets? What will happen when we expect the Genius bill gets passed or voted on, I think next week, and then passed? There will be a lot of attention around stablecoins in general and crypto in general as well. But I'm trying to figure out how much of this is like whatever the float percentage is and new issue opportunity versus like crypto specific engagement and activity.
Yeah. I think we talked about the CoreWeave IPO on this pod and it being a barometer for the market. Obviously, Michael, alluded to it doing very well. And so the window is open. And there's just been so few new issuances of company shares that these are doing well because there seems to be a scarcity effect. I think CoreWeave is unique relative to Circle, given that like the AI pipeline is kind of unbounded at this point. The Circle dynamics of their business are interest rate sensitive, economics sharing sensitive with Coinbase, and then just their adoption and uptick. I think of all those things, we're probably most bullish on their adoption and uptick and traditional payment rails adopting USDC. But the interest rate background is going to get harder and harder, especially for US issued stablecoins that can only be at the front of the curve. And so I think at 18 billion, 20 billion, we're probably not buyers, but it's an amazing outcome for Jeremy and the whole team. And I would expect that there would be more crypto IPOs coming pretty quickly post this. A lot of people are planning Q1 2025 to go public, and they probably move that up to the extent they can.
26.
Oh, right. Jesus, it's 2025.
Question for you guys on this. How do you view, because on the one hand, I think that there are a lot of, at the same time, there are lots of tailwinds. There are also challenges for stablecoin issuers, but feels like the barrier to entry for at least what is being dubbed in this new Genius Act as payment stablecoins like USDT and USDC. It doesn't seem like there are tons of new issuers there. Like there are relatively high cost barriers to entry there. I don't know. It could be actually an advantage. And then could we talk a little bit about how are you guys like how much does this materially change the market for like M&A new capital formation. Like we just haven't had that many equity wins in crypto either. Like this feels like a pretty big win for early equity investors. I'm curious if you guys view that as being.
It definitely will help. I think being able to have decacorn outcomes, either in the public markets or in the token markets, are great outcomes for the industry. And right now, when the rest of the industry and frankly the rest of the venture class is starved for liquidity, having liquidity right now is going to be a benefit in a lot of ways. If you look at the holders of the shares, it's traditional equity. It's not even like crypto venture firms. I think Excel and Briar Capital and Oak Tree. They're not Oak Tree, but there were a few kind of traditional owners of this, but it's not the crypto natives that are the largest investors, which is interesting. A lot of them didn't exist at the time when this was invested in, but I do think generally what will also happen is it just furthers the point of stablecoins being this massive potential business model where you can have not a ton of people, hundreds of people building a $16 billion business. And yes, it is interest rate sensitive, but you do have the scale of tens of billions of dollars of distribution. The only other places where you're going to be able to get that, if this bill does pass and you have to abide by the standards that Genius requires you to, generally the only ones that are going to be able to compete are the banks. And I think right as Genius was passed or right soon thereafter, there was some rumored article about JP Morgan and a consortium of banks starting their own stablecoin. Are they going to be able to speed run that, and catch up to Circle? Like it is a question, but also, how much does that materially change the prognosis for Circle or stablecoins in general? I think just adds to the value of it because they're going to be going after different opportunities than what Circle is doing. So broadly, I think it's positive for the industry, and bringing more stablecoins on chain is going to be very positive for, especially, to your point, Mike, the non-payment specific stablecoins, the yield coins, let's call them. There's just a huge opportunity once you bring tens of billions of stablecoins on chain, payment stablecoins or JPM coin, for those to get slurped up by anything that's yield generative. And the yield, structured product coins are probably going to be where you get that differentiated take, especially when you've got, let's say in 2026, a new Fed chair and the short end of the curve is getting dropped because they're dropping Fed funds rate. Where else are you going to be able to get that stable 5% yield? And I think that's going to happen on chain.
Why I think that stable coins are uniquely disruptive potentially to the bank. Yeah, you guys probably know that, like Helmler's 7 power framework, where it's kind of a list of different attributes to compare different companies. And, one of those is counterpositioning. And the idea is that a newcomer adopts a business model that incumbents can't copy without self-harm. And I think this is relatively disruptive to incumbent banks in the United States for that reason. I mean, this is literally a concern from Treasury's perspective. It's basically eroding that interest margin for banks. And it does feel to me, if I had to make a prediction, I would say that those consortiums of banks issuing stablecoins, I bet they drag their feet. I don't think they're going to be hot out of the gate with this because they've been waiting for clear regulations, but it's disruptive to their core business model. Just think about how, from a balance sheet perspective, imagine a bank acquired a stablecoin issuer like Circle. What would that do to their net interest margin? That crushes their net interest margin because they move a bunch of assets onto their balance sheet, but the assets are short-term treasuries. It's the lowest yielding. It messes up it literally erodes your net interest margin. So I don't know. I don't see banks like rushing into this.
Well, I think it depends on the model that they choose, right? And the reason why net interest margin would get cannibalized with something like a Circle is because they're giving out 60% of its top line revenue in incentives. And you'd have to assume a bank would be doing something similar, but like, do you think JP Morgan is going to be giving you, 3 3/4 rate, whatever you're getting right now for USDC, if you just hold JPM coin on JP Morgan? No, of course not. They're going to give you whatever the checking account rate is, which is probably like 10 bips. And I actually think if JP Morgan was thinking about it in terms of net interest margin, if there is demand, and this is once again a very big if for native JPM flows, JPM coin flows, where I, as a customer, want JPM coin on chain. I'm giving dollars. So like I go in the same way that I do USDC, I transfer USD in, I get JPM coin, and then I put that on chain. I can't earn yield on that. That is, coins that are in my MetaMask wallet or whatever wallet that I'm using on chain to pay for things or stake or do whatever, assuming that there's integrations. JP Morgan's just flipping the full freight T-bill rate on that. Like that increases their margin. It doesn't decrease it. Now, if they're having to give out 60% as incentives, sure, that may take a hit. But right now, I think if it's just the pure play JPM coin and people think that, or JP Morgan thinks that they're going to have like demand for this JPM USDC type stablecoin, that's going to be actually very beneficial to their business. I just don't think that there's demand for it.
Hold on. Help me think this through though, because like let's just look at a really simplified version of like Circle's like USDC's balance sheet versus what a bank's balance sheet is. So on the liability side, you have the $1 worth of customer deposit, and then on the asset side of the balance sheet, you have different mostly fixed income securities, right? So where Circle operates at the short end of the curve is the safest and therefore the lowest yielding asset that you could have on the balance sheet. So if I were to move that into a bank, on the bank balance sheet, you have those same $1 customer deposits, but instead of just having short end of the curve, you have long end of the curve. They take duration risk, they take credit risk, they go into different types of assets that are higher yielding. So all else equal, if I were to move the $60 billion worth of liability, like customer deposits, which is, USDC, and the asset side of the balance sheet, it would have to drag the average down because you're moving a bunch of the lowest yielding assets that a bank could have onto the balance sheet. I feel like it would erode the net interest margin.
That's correct. I mean, that's why these things are not banks, because the banks are actually more profitable than this type of stablecoin.
Yeah.
So, getting leverage to basically what you're saying is that if you're going to start a stablecoin, you believe it could have really, 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 really large scale, enough so that it would outstrip just living within a bank and kind of trying to build that technology product without stablecoin rails.
Mm-hmm.
So personally, not very interested in that. I think with the Circle IPO at $90, the things to remember are, number one, there's a 6-month lockup. So this is low float, high FTV until I guess it is December. So we will know the real price of CoreWeave in November, and we will know the real price of Circle in December. And just, given where people think the cycle peaks and when it peaks, at least on Twitter, this could be something that would potentially be a good hedge for existing holdings. And I kind of think of it like that versus, Framework should go off and buy some Circle.
Over the years, we have seen a multitude of hacks, rugs, and bundled launches. The number one way that crypto traders can protect themselves and the wider community is through on-chain analysis, knowing who is moving funds and where those funds are going. Paired with their new exchange, users can see what the top traders are buying and selling with Arkham Intel, and then trade on that information with Arkham Exchange. Arkham's exchange provides traders with the tooling and liquidity to take action in crypto markets based upon their on-chain observations, bringing them the world's first exchange powered by crypto intelligence. To get started, follow the link in the show notes below. Hey everyone, quick shout out to today's sponsor, Marinade. Since launching in 2021, Marinade has expanded their suite of products to provide solutions for both DeFi users and TradFi, including liquid and native staking, as well as direct enterprise integrations. Marinade's platform is optimized for institutions to securely expand their exposure to Solana. Whether through the provisioning of custodial or non-custodial yield, integrating staking rewards into Solana financial products, or leveraging Marinade's best-in-market rewards rate for revenue and treasury management. Whether you're in DeFi, TradFi, or somewhere in between, Marinade has something for you. To learn more about Marinade, follow the link in today's show notes. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. Okay, switching topics here for a second. I would love to get your guys' take on so PumpFun allegedly has plans to launch a $1 billion token sale at a $4 billion FDV. And, there's not an enormous amount of details on this. They haven't publicly come out and confirmed it. Although there's been quite a bit of rumor at this point. So the run rate, basically the total cumulative revenue, which has been largely generated within the last year from Pump Fund, is about 700 million. So again, if you were to do some really simple napkin math, like it's below 10 times trailing revenue, which is actually relatively reasonable. But I'm curious how you guys would think about just the opportunity of like Pump Fund in general as a token here. Like it's kind of an index on the meme coin market. We can talk about how robust that is and how much legs you think it still has. Like that's kind of the main risk in my mind. But yeah, I'm curious what you guys think.
I mean, I think as much as people would love to this not being the case, Pump Fund is the largest by far consumer application on crypto writ large,
Hmm.
and it is making a ton of money and it's profitable. And I would imagine that with the token, there will be some sort of buyback mechanism, and it'll feed back into the token. In the similar way to Hyperliquid doing, the whatever percent goes back to the token, I think that you could assume that anything that's revenue generative at this point has value that flows back to the token. And so that's kind of how you could build a financial model for this asset. Now, what I think is different about Pump is because they have such a large install base and user base. I mean, they are basically all of the consumer application activity on Solana, but also generally all of it on all blockchains too. And what do you do with that? And the last couple of months, they've launched a mobile application for getting consumer crypto and consumer activity in front of consumers in the form factor that makes the most sense from a consumer adoption perspective, which is mobile. And I could see there being a world in the same way that you have Robinhood, who is getting closer and closer to the metal in terms of the blockchain and crypto side. Like for instance, I could see Robinhood launching an L2. I have no information as to whether or not they're going to, but like that could be something that I would not be surprised by seeing. They're moving towards blockchains. I can see Pump moving more towards centralized activity and trading and consumer applications, and live streaming and kind of the communication mixed with speculation. I think is kind of the direction that they're moving. Exciting to see because I think there's a lot of people who've been waiting for something like this and kind of questioning whether or not it was going to happen. And all the early investors, hats off to them and what looks like to be a successful opportunity and outcome. But yeah, I think this will also drive. This has the potential to drive the first real consumer wave in crypto, in my opinion.
On Pump specifically, I would say that the Pump token is probably a much cleaner expression of the Solana trade and like the financial nihilism trade, whatever you want to call it, the crypto consumer trade that currently is happening. And so you see takes on the timeline about how extractive it is or is perceived to be, and people who don't like the ethos. But at the end of the day, it is almost a billion ARR business with 80 or 90% margins, and it's selling at 4 billion. So I don't think it's really mispriced, and I think relative to Sol, especially, it will capture probably as much or more fees. And so I think our um, thesis on Sol at the moment is we want to own a lot of Jito, and we want to own the premier apps on the chain as well, and invest from that perspective in the ecosystem. And no slight to Sol, but there is just a valuation discrepancy between the apps and the chain, and I think those resolve with time. Um, I think the other thing you have to do is notice that there's been a pattern of everyone shitting on the CoreWeave IPO, ripped. Everyone shitting on the Circle IPO, ripped. Well, the same
Hyperliquid.
Hyperliquid too, ripped. At a certain point, you have to acknowledge that the ICO window is open, and it's not open for everyone. But if you have business metrics and you're a legitimate company and there's adequate disclosures and all of that, this is a good time to launch.
Okay, so I have some data that I want to share here because the interesting thing about this token launch from Pump is this is the first time that there's been. It depends on how you want to define this, but at least some attempt at competition in the launchpad space. So Pump was extremely dominant in terms of the market share that they commanded. On the launchpad side of things, it was like 96% for the vast majority of time that they've been in operation. That has gone, it's sort of found equilibrium here at closer to 65% currently, in between Zora. Actually, Zora is the one that looks like has the most staying power, despite the hatred of people on the timeline. But like kind of other things like Clanker, Believe, the Arena, Let's Bonk.fun. So there actually is meaningful competition on the launchpad side of things. But what they have done extremely well is they've been able to supplement some of the market share that they lost with Pump Swap. So if you look at the aggregate amount of revenue or volume that they've been able to generate for what they've lost on the bonding curve side of the trading, they've more than made up for in their AMM.
Right.
fees.
I mean, people were posting the one chart of the coin fees versus
Right.
the pump swap fee, and it's just like, look how far down the coin fee. It's like, this is a vertically integrated DeFi primitive.
Yeah.
Maybe they do lending, maybe they do whatever.
And I'm curious to see what those metrics look like post token launch, because I would imagine a lot of the token probably goes as incentives for choosing Pump to launch your whatever.
Mm-hmm.
I'm a little bit torn on it. I actually don't have the same problem with Pump that a lot of people do. I'm kind of rooting for it. I on the plus side of things. All right, here's the thing that I find interesting. I think you could kind of look at Pump as a comp to something like a Hyperliquid or like a centralized exchange, or you could look at it almost as a creator platform like an OnlyFans. I think I kind of like it as an OnlyFans type platform, actually, where when you hear it's like illicit, people kind of don't like it, but it obviously has product market fit. And for people that are creators on each of those platforms, porn stars, Memecoin creators, it's been actually quite good. And I actually think OnlyFans is one of the, if it weren't OnlyFans and it wasn't, related to pornography, it'd be one of the big tech successes of the last 10 years. It's a phenomenal business. And so I sort of look at Pump from that lens. I do think in a way it would be simpler to underwrite the execution of Pump as an exchange, because there's a much more clear playbook for how to compete in that arena, albeit it's much more crowded. I think their vision is to redefine kind of what it means to be a social media app and actually compete with maybe the OnlyFans or maybe the YouTubes of the world. And they kind of see themselves as this is where creators can come to make money. To begin with, the question is, how do you actually make the next Mr. Beast, which no one has really figured that out yet. And so it's interesting. It's kind of like, if you look at it through that lens, you're underwriting a really big swing. I think from the token side of things, the $4 billion FDV valuation, people are going to look at as attractive. I think the market will look at that as pretty reasonable.
I think of it as the market is valuing it at probably a pretty fair value based off of just the valuation methodology as an exchange.
Mm-hmm.
But it has a massive call option on whether or not it can bridge the gap into social media or consumer platform, content platform, et cetera. And I don't think that those are mutually exclusive. I think the whole point is that they're combined in a unique way that I think the consumer world is moving towards, which is, they've proven that speculation is a consumer application. I think that you start to integrate into chat and communication and live streaming, all the different forms of communication that make this differentiated. And you talk about OnlyFans, and there are examples there, but the other one that I think about is Whatnot, and sort of like that the TikTok commerce. I don't know if you've ever spent time there, and that is actually one of the fastest growing segments of e-commerce. Is basically like it. Whatnot is specifically for collectibles, and TikTok commerce is like all the people who are like trying on clothes on TikTok, and like you can buy them direct, and it's really interesting. But it's definitely a live stream or a very small soundbite or video bite form of commerce that I think most consumers are kind of undervaluing. Instead of buying clothes from Temu or Shine, you're buying it from Pump, and it's a meme coin which you can make money on. It's just like speculation, entertainment, and content. I think combining into a single app.
Yep. Yeah. Nothing further to add, but we've actually known Noah since he was doing NFT perp and didn't do the first few rounds, but excited for this.
I got a question for you guys. How would you assess the underlying health of the meme coin market? That's at least in my mind when I look at this, the sort of the risk. How would you guys look at that?
I would say it's, in a casino, there's a lot of different types of games, and this is one of them. I think it has longevity, and the trader P&L by wallet size data that was put out, pretty, edifying in terms of what it says about the profitability of these traders. And it's not that bad. It's only a few percentage points below many traditional casino games. And so I think the extraction narrative of Pump Fun is probably incorrect relative to the amount of value and people that they're bringing into crypto. How much of Solana's rise was Pump responsible for? I would say 80, 90% of it. And so I think at some point you do have to kind of confront the fact that Pump is going to do their own token. I don't think they're going to launch their own chain, but they're going to build a lot of vertical DeFi primitives and eat a lot of the fees that are traditionally associated with Sol outside of the MEV tipping and kind of the Jito world, which will kind of stay on its own. And so underwriting Sol as an asset gets harder and harder relative to some other, assets. But I think that's a little bit of why Sol was selling off the past few days, is people front running that. So maybe that's already over, but we'll see.
Yeah, I don't disagree with any of that. I think it'd be really hard to. I mean, you can just look at the total market cap of memes on Pump Fun as sort of a general proxy for health of that market, but also you probably want something like, I think there's a reason why OnlyFans releases like the amount of dollars they pay out to creators, right? Like that's what you'd want, right? Like that's the two-sided marketplace that exists. So you'd want creators and also speculators to be making money. So something about the half-life of a meme coin, I guess, and just intuitively, it feels like the shorter that half-life is, the less healthy that market is. You'd also probably want to see a certain percentage of memes over a certain dollar value. I don't know. There are probably some statistics that you could cook up there. But if anyone has very sophisticated thinking around this, I'd be curious to get people's thoughts. But
I do want to go back to the Elon Trump feud because it is escalating a little bit. I do think it will have an impact on crypto now, just thinking about it a bit more. But I don't think it'll be evenly distributed. I'm a little bit worried about BTC being so close to Trump at this point as a large BTC holder. And I view ETH as probably a better bet in terms of less collateral damage.
What is escalating here? I'm not. Yeah.
Elon agrees President Trump should be impeached with JD Vance replacing him.
Update. It's gotten worse. The vibes have deteriorated. Jeez. Mike, you seem what is your feeling right now?
Oh, I mean, I'm just watching it all unfold. Honestly, I think I'm in like spectator mode. If I just find it interesting, I can't look away. I don't know. I don't have a thought on what it's going to do to crypto. I would trust your guys. I don't have a strong opinion on that. So Vance, I'll defer to your judgment there. But
I think in short term, it could be bad. Like market selling off means, Bitcoin and crypto are going to move first. I think long run, this probably extends the potential of the bull market for Bitcoin, kind of the general price targets for all of these assets. I do think that, where we were in January was more, we need the strategic Bitcoin reserve for us to, hit 250K this year. I think that's actually just like we haven't heard about that in 5 months as well. And like the need that you have of Trump or the administration to affect, Bitcoin or Bitcoin prices or crypto prices in general, I think is kind of like out of it. It's not necessary at this point for those assumptions to be true for price targets to be hit. Now with all the corporates buying, now with all the public crypto vehicles, like there's gonna be enough buyers relative to sellers for all of these assets. I'm not worried. Short run, it may be a little wonky just because there's market is selling off with every asset, and crypto will move first and fastest. But I think long run, this actually increases the likelihood of hitting new all-time highs this year.
I think BTC will do well. I do think there is some sort of baked in political risk with people looking at Tesla and saying, that's what happened to the last guy that got super close to the Trump administration.
Right, but who's the guy for Bitcoin or crypto now?
It's just the price.
Yeah,
it's way easier than to blame an Elon.
I do think that it's a little bit. I love how accepting obviously Trump is of crypto in general and how forward thinking he's been. I do think some of these family and his media empire, like launching a Bitcoin ETF, and it does open up. You're giving ammo to the other side, right? To Democrats to pull this down and call for conflict of interest. So yeah, I think whoever's got Trump's ear here, love that he's supportive of the industry, but we don't need to give ammo for people to say that this is a Trump, money laundering pet project, conflict of interest thing. I think that at some point, I think it kind of becomes damaging. I'm curious what you guys think, or if it's just all good.
It's definitely not all good.
Yeah.
Too early to tell. I think there could be this situation where Elon says the U.S. is fucked. Let's just buy Bitcoin. I think that probably is the case, given that think about what Elon is going to continue saying over the next weeks and months. The budget is fucked. Congress is toast. That isn't a good program. We need an alternative system. That's definitely like one thing he could say. Another one is, I'm just going to triple GDP. Frankly, I don't think he's in a position to do that with Tesla where it is today. So I think he'll opt for I'm going to start a third political party, and it may be based around Bitcoin or some sort of crypto asset that is, orthogonal to the traditional equity complex. That seems to be where I think he'll go, and that will be very bullish for Bitcoin. But I think ETH being more neutral is probably a better risk reward play at the moment.
Just like the Sam Altman play, better to be under the radar.
Yeah, no. Here's the analogy. It's like Elon is BTC, Sam is ETH.
Yes.
Okay, I've got final story for you guys. I would love to get your take on. Sorry, this is going to be just a quick level set here, but I don't know if you guys got a chance to read this End of the Foundation Era in Crypto. This was written by Miles Jennings, who is the legal guy at A16Z, and just to set up, the TLDR of this is questioning whether or not foundations are still necessary or if there's a better way. And I'm not just going to give a quick synopsis of the article, and then I want to turn it over to get your guys' take. But I think it's helpful. He kind of goes into the history of foundations and why we arrived at this in the first place. And for folks who weren't around for that period of time, I think there are two sort of driving reasons for why this foundations exist. Is one, we needed some kind of framework so that we could legally issue tokens, and there's a bit of an element of what's the legal way of doing this, and foundations were an answer to that. I think there was another ideological driver and component of that, which is we want to decentralize these networks as much as possible. And we want a neutral steward to ensure that that happens. And that's largely the reason why the Ethereum Foundation looks the way that it does today. And so obviously there are a lot of challenges around this. And, we can talk about Uniswap in a little bit, because there was actually a really good bit of reporting from DL News on Uniswap getting brought up in some of the conversations in DC. But there's some challenging incentive alignment and operational frictions with this, which is, the typical path of a protocol startup is that you raise as a labs entity, then you spin off a foundation, and it immediately introduces questions of like, hey, how can we make sure we're all marching towards the same direction here? You actually have to have separate missions. You can't have the same Slack channels. Like, does someone from the LabCo go over to the foundation? There are all these real frictions associated with it. And then once there's a launch, sometimes it's like, how do I even communicate here to align all these different stakeholders? So there are real frictions and challenges associated with it, not the least of which that a foundation, there are real limitations around what a foundation can legally do. They're not for profit. They can't act in that way. They can't own or control even a product, which is for profit, right? So maybe foreshadowing some of the Uniswap challenges. But yeah, basically what Miles is questioning is whether or not now is a good time for a better, simpler alternative, which is just companies. And his point is that the regulatory landscape today is different than it used to be. There might not be a reason to have the same structure that we've had in the past. And also we have better tools and more decentralized pieces of infrastructure. So he calls out DUNAs, which are decentralized unincorporated nonprofit associations, like legal entities for DAOs. And then this is Gabriel Shapiro's thing, but Borgs, which are cybernetic organizations. So take some of the tools and components that you might recognize from a DAO setup, grant programs, security councils, etc., and then allow these DUNAs to govern them in a way that doesn't make them a security offering necessarily. So I would just be curious to get your guys' standpoint here. Do you think we're at a place where the US is secure enough where we can do away with this foundation structure that we've had for a long period of time? Or are there still challenges that haven't been solved? Or what's your take on this in general?
That's a really good synopsis and overview. And there's just so much to it in so many ways. And I would even say like a more global comment is we have kind of ended around into industry norms that I'd say we should be questioning writ large at this point.
Agreed.
One of them is 49.9% max to insiders. 50.1% has to go to the community in some way, shape, or form. You got to do a 10% airdrop because that's what Uniswap did, or bigger. Like there are just norms that have been developed, and we haven't really gone back and questioned those assumptions. And maybe they were because at one point in 2021, some law firm gave some guidance that to become sufficiently decentralized, you needed this to be, but it's like that's literally one person's opinion from 4 years ago that literally is irrelevant now. And so I would say as it relates to foundations and legal entity structuring and token distribution, like we are waiting for market structure.
Yep.
And being able to have a market structure bill will dictate all the answers to this. And I think, hats off to Miles. Like he has been the thought leader on all of this, push forward so many different ideas. And I know is in communication with people who are thinking about market structure and working on it. I wouldn't be surprised if this is sort of like a precursor to some of the stuff that will hopefully get factored into market structure whenever we see more of that or it gets further along. But yeah, we should blow up this foundation model. Like, why do we need to tie one hand behind our back when operating these things, as a company versus a foundation? And, you're selling tokens post token genesis event, but it's coming from the foundation. So the money stays there. Yeah. You're a labs entity, but you're asking for grants from the foundation that you started. You're transferring your IP because it can't be on the, it's just like you're contorting yourself like a gymnast just to be able to abide by some defunct perspective governance standards that probably won't be relevant after this market structure bill goes live. And then the other vector here is what's the jurisdiction that you're in? Is it the US? Is it Europe? Which standard are you going to choose to follow? So yes, to answer the question succinctly, we need to blow up the foundation model, but we can't quite do that until we have regulatory clarity. Regulatory clarity comes from market structure bill.
Agreed, Michael. Agreed. I don't know, Vance, if you have any. I can share, by the way, one additional article here that I thought was good. And, it's kind of, this is the salient example when it comes to at least the misalignment in incentives here. So DL News did a piece of reporting on Uniswap's DAO drama, which has sparked debate on decentralization in Congress. And essentially it is the Uniswap Labs chief legal officer, Catherine Minarek, testified to a House committee where DAO governance sort of came under scrutiny. And what's interesting is that one of these representatives, Sean Casten, who's a Democrat from Illinois, he actually referenced a squabble about governance at Uniswap. And I don't know if you guys remember this, but there was I think it was a Uniswap delegate a little while ago who criticized some of the upgrades that from Uniswap is either V4 or Unichain, where the DAO had not been consulted at all. And I think also, and I love Uniswap, by the way. I think they're some of the best actors in the space. They're great. I fully think that, the reason why they're going through these challenges is because of a poor regulatory system. But, this is not a particularly hot take, right? Like the token holders of Uni haven't done particularly well. They're not getting any of that, the trading fees that go through the front end, which all goes to labs. This is my own speculation here. I have no inside knowledge, but A16Z has a relatively large stake of Uni. There was a line in that in the limitations on Miles' post that a foundation cannot be associated with any for-profit product. So there are real limitations here, but it also does make a lot of these tokens uninvestable. So I don't know what my point is here. I'm just, I agree with you guys. Like, this really does all come down to market structure. I know you guys have been highlighting that many times on this podcast for the last several months. And yeah, I just could not agree with you more. And it's coming at a critical time too for, I think, tokens in general. But
One other thought. Well, kind of 2 points. One I think is we talk about this with founders, especially at the early stages, where it's like, what are you going to choose, token or equity, as to where the value accrues. In the case of Uniswap, you do have both, which is frankly the only example that I've found that has potentially successful both value accrual to an equity in the form of the wallet and token in the form of the Uni token. But clearing up this will help clarify that question as well, which is how do you have an aligned incentive model across the board. But the bigger thing, I think, which would be really cool, which is some of these Cyborg and Duna constructs, is the way that you vote and the way that you have shareholder governance is you literally have to like take your shares and vote. And in many cases, if you hold them at like a BlackRock through an ETF, like they vote on your behalf for shareholder governance, and you don't actually get a say. But like that's technically how all of this stuff works from like a publicly traded C corporation. And it would be really cool, I think, and we're starting to get there with things like Sky, where governance is going to be a little bit more automated and every month until there's like nobody actually working there. And it's just like a fully automated protocol. And like, that's really cool from a financial perspective. But like, we're going to start to get to these points where it's not people who are making decisions potentially, or it's just going to be automated and it's going to be governance rights via the token. But having clarity around that, and I know we're going back to like a 2020 or a 2021 concept of like DAOs actually having autonomous, organizational authority and control. That would be like the real cyberpunk vision that I think would enable so much more growth in this industry. It's not just like tokens are this new cool thing that like we created a new capital asset. It's like they actually help build this new organizational structure, which is purpose built for basically like the blockchain AI world that I think is coming more rapidly than people expect.
Yeah, agreed with all of that. So I don't know. Ending on a note of optimism, I think with both the Genius Act and the Market Structure Bill, if they hopefully got done this year. By the way, the crypto legal community has reviewed it very positively. I think Jake Chervinsky said of all the different iterations of the bill that he's looked at, this is by far the most positive. I don't know. I just feel good. I feel
Gabe Shapiro said the same, which like coming from him is high praise in my book. Yeah,
agreed.
It's hard man to please.
Yeah. So yeah, I don't know. Kind of look out at the end of this year. I feel very optimistic. So yeah, I don't know. End on a note of optimism, and it'll be interesting to see. I'm sure all of our takes on. Man, can you imagine the All In podcast this week? That's going to be
a banger.
It's my final closing word would be zoom out and enjoy the process, enjoy the entertainment, and it's going to be a positive year. It might just take a little bit longer.
Yeah.
All right,
fellas. Fun one. See you next week.
Bye.